So if Iran goes and flattens US bases for the fact that it knows that America's running quiet cover, low profile cover, but at an extended basis for supporting Israel in this attempt to flatten their right to have nuclear power. And so they claim nuclear weapons, which they've been accusing since the 1990s. It's a bit like Iraq. It's the same theme. What you'll end up getting, if this gets worse, is we'll get a bigger spike on the gold-silver ratio, because gold is the ultimate safe haven for the big players when you're getting the acceleration in debt debasement and they need to park up big money fast. It's not silver. It doesn't matter what the straw's name was that broke the camel's back. It's the fact that you can't eat, you can't drink, you can't transact, and you're in a problem environment where they seek an extreme reaction from you, where you'll sign up for their chosen, highly biometric surveillance state solution. That's the true. So I kind of shirking your question and saying the better question is, how prepped are we for that? And it doesn't matter what the straw's name in.
You're watching CapitalCosm. My name is Danny. It is June 13th, Friday the 13th, 2025. My good friend Francis is here to join us. Francis Hunt from the Market Sniper, that is. And we certainly have a lot to talk about. Just last night, we witnessed an attack on Iran by way of Israel, and the market went ballistic. Oil spiked to $77. It's retraced back to around $73, $72 at the time of this recording. Hopefully, the interview hasn't gone stale by the time you're watching this, guys. But gold is flirting at an all-time high. And we are just at resistance on gold. But Francis, I'll let you kick it off. What do you think should be the biggest takeaway given the events that have transpired? We're less than 12 or 20, between I would say 16 hours removed from the initial strike. What should investors be looking at as the biggest takeaway?
Well, there's so much where to start, basically. So we've stated from when Trump was running that the intention will be, as under his presidency, to do the attack on Iran with Israel. Now, some people will say, hold on, it's only been an Israeli-led attack, until they find out that all the fighter planes are being refueled by American carriers. The whole support for this attack is being provided. They just didn't want to be the tip end of the spear. And also, Donald Trump's mood music has been to pretend to be an out of friendship with Netanyahu. And also the mood music has also been, there was still some negotiation to do it. But he's the Zionist. He's 100% baked in as the Israeli. This is an AIPAC, ADL-run government, controlled government. They're all funded by it. And without doubt, Israel has been wanting it for this cycle. And they may well be the trigger of the World War III. If this escalates an attack on Iran, you may find Pakistan is, allied with Iran. So that leads to an attack on India. We could World War III out with, and that's when it's a possibility. And it could escalate. That's the escalation side. But we have had a lot of these wars that have led to strikes, military strikes. You get the initial spike in the oil, and then they go into these sort of low tempo attacks. It's not the first time Israel has run attacks on Iran, and then Iran has, later retaliated. But everybody goes, this is the one for the nuclear war. More interesting for me is in terms of markets, and my geopolitical guess will be as good as anyone else. I think they want to engineer World War III in due course. One of these goes on into an escalation, but we've had lots of events where we've had individual nations sparring for a bit and then it peters out. You cry wolf 10 times, and number 11, or should I say number 13, as we're the 13th on Friday, turns out to be the one where it goes full ball live across the board on a variety of areas. I think Trump has actually been talking on Putin, much less to do with Ukraine, but on trade and on Russia's non-participation on an Iranian attack. It was exceedingly disappointing how Syria was taken down. with barely bullets being fired, apart from minor skirmish, and how the greater Israel project is unfurling. So I'm going to stay out of the geopolitics, apart from saying the nation that controls America is getting everything it wants and all the support it needs at American citizens' cost. What I want to point out technically, more interestingly, is how that's lent on gold. So oil spikes, as expected, but actually the precious metal that runs is gold. And a couple of things I've said that were very niche and contrary to the 99% was, be careful about calling this the all-in silver run out and out, the white metal industrial run. I suppose we can include platinum very much in that. We're very bullish platinum. We think it outperforms silver and gold in terms of absolute multiple on the basis how long it's been undervalued. But what you'll actually see is the gold-silver ratio has done pretty much what we expected. It pulled back from that 100, but it's getting a bounce now at the 90. If I share charts, this might be an interesting thing that the guests will enjoy to see. So
Sure.
Entire screen. And we go gold-silver ratio. I'm hoping that's showing up all right. Let me know if that's working for you, Danny. And what I was highlighting is these orange box zones that are just in and around the 90. Apart from real super peak events of exceptionalism, that was the CV19, the peak end of this crisis, you mainly are being rejected when you run 90, 90, 90, 90. I've said this many times on my channel. It's only recently that we squeezed higher, and we warned that that might happen when you had this as a continuation pattern. This flag didn't break down. This washout didn't break down. It turned out to be a flag. I'll just put a different color or a thicker
flag.
It was actually a bull flag.
Yeah,
to the upside. So it kind of a flag-esque. Let me just get that drawing in a different color so it pops a bit better. And we kind of had that. Flag-like, might have been a tiny bit of a squeeze in it like that. So we suggested that this is actually going to go up. We were contrary to a lot of the people because everybody
for the uninitiated in technical analysis, whenever you see a flag pattern like that, it usually results in an upside move. Correct? When you have a descending flag down, it's usually a sign that you're anticipating upside momentum, eventually a breakout.
Correct. And that was an event that took a lot of people by surprise because everyone was saying, you're at 90, we normally get rejected. So the point being about the gold-silver ratio that we've warned a little bit on. And everyone, when we had the smaller, I'm on a weekly time frame. I'll drop the time frame in a minute. But everyone, when this started to break down, they're going, that's it. It's all just going to be silver now. This is the big boss. You don't own enough. And I'm a massive silver bull. And that moment will come. But you will cry wolf 7 times before you're right on the 8th or the 9th time. And I warned that you would get quite potentially, technical analysis dictates that you get this very key 90 zone and you get rejected at it. And once you're on the other side of it, it can turn into support. And that's what we're seeing on this candle here.
And so when this chart goes up, that means gold outperforms silver.
Correct. What it often means is gold gets the big money run, the fear-based big money, central banks, hedge funds. Remember, you need to get into something that's super liquid, that has big market cap, and that can hide a lot of value without a major storage issue. Silver isn't that. If you want to park up $50 million, you need a real warehouse if you're buying silver. Platinum, not enough volume, not enough supply. Gold is the metal for central banks. It's royal. Platinum is royal, but it's super, super scarce royal. So it's hard for it to play that part until you get a much bigger price on it. Then you can say, okay, I don't have as much of it, but it's 3 or 4 times gold by value. Then it's great. You can buy it too, but it's the availability. It's almost a little bit too illiquid. Silver, too much space for it. It's not valuable enough yet. Yes, we know it's been manipulated, but in terms of the price inside the paradigm that we exist now. So that's why I've suggested that you would get that bounce at the 90, and now that's coming in. And it's amazing how news-based events matches our technical analysis, because we had, if I drop down to a daily and just get the smaller time frame now, we had an inverted structure here, and we said, look, silver and the white metals overperform, and we've upped our coverage on our own channel on both silver, but particularly platinum, which is super undervalued, and saying these guys are going to do a little bit better than gold. That was the phase there. But we said, watch out when you start coming up to this 90 level again. That's when you're likely to get a bounce. So gold never goes out of fashion, and it continues to be the king.
Is that because insiders front run the price? Is that why technical analysis has the predictive power that it does? Because you have insiders trading the price. So you had, I would presume you're looking at what, 1, 2, 3, 4, four or five candlesticks onto the downside before you saw this big bounce up last night in the ratio. There is the reason why TA can be predictive is because you do see these insider moves in the price action that indicates some sort of external event down the line?
It can be insiders, it can be a lot of things, but there's also a sense of relative valuation. Actually, if there's a war going on, gold is the chosen metal. There's also going to be potentially less normal if it's not a military industrial. There's a military industrial case for silver and even possibly for platinum. I'm not too sure. I think there has been, but not on any meaningful scale. But you're going to get less of that normal industrial activity, and you're going to have more of the militaristic variety, and you want even more safe haven for funds, which sees gold be, real money. So debt, let's go back to, where I always start every conversation. It's a debt-based collapse. If America is playing a supporting role, but not trying to highlight it too much, for an Israeli-based attack on Iran, and if even Israel's debt is come under threat, by the way, I was retweeting about their debt. What happens is everybody knows a spending splurge is coming. War is how they steal from the citizen. I've spoken to you about arms dealers, politicians, and other hyenas, and they carcass eat in deals, dirty deals with bungs, with margins for operators, politicians, family members in corporations. It's better than pharma for theft even. So the military industrial complex is an enrichment of the insider supremacist class. And every time they start a war, it means peak theft and a major spike in debt. So that's very gold supportive because it's very debt and dollar undermining. So that's another reason, and it may be the primary reason in my view, as to why gold becomes 100% sought. So people know, okay, bungs, corruption, more ammunition being bought, more dirty deals. The taxpayer pays top dollar, and there's many people taking a turn in the supply chain that don't need to be there. There's never any doggy investigation on the procurement of the arms. That is a secret. That is the drip vein in the jugular, virtually, never mind the arm, where they get so much vampire blood that is yours, and that's the dilution. So and actually Gerald Celente says this very well, to coin his phrase, when you're going into a debt-based collapse, they're going to take you into war. And he's 100% correct, because it's a final rinsing out of all the money they can steal out of the existing system. And I think we get some form of World War III as an eventual outcome. But there's a lot of pokes and flare-ups first, potentially, before this happens. As I've mentioned, Israel has attacked Iran before. We've had this conventional, moderately low tempo war. I don't say that in terms of deaths, that it's that low tempo. Every death is wasteful, but it's not a nuclear war between Russia and Ukraine. And Russia is more just not being over-engaged, just putting people on the ground, and drones, making sure that it's still got plenty of powder in the tank for any other NATO-based attacks. So we've had a lot of, this is it, we're going to World War III. Right. So just coming back to the charts, the one time you broke and blasted through the 100, apart from recently when we had the Trump tariff tantrum. So remember this move, and we warned that you can go higher. You made a marginally higher high the second time. That was Trump tariff tantrum. That was what it took to get you through 100. But you didn't go as high as CV19, which was shut down the world, except for Amazon and other oligopolies and pharma companies, which we all know the reasons why. they were doing so well as bandits and also in the hyena category. We are when we are at peak crisis, we will hit the highest gold-silver ratio. It continues to have been our theme. And technically, as I've said, you bounced on the 90 here. The peak crisis has not happened here, not yet. We're teetering on the brink of a potential one that if we stare into the abyss and this escalates, so if Iran goes and flattens US bases for the fact that it knows that America's running quiet cover, low profile cover, but at an extended basis for supporting Israel in this attempt to flatten their right to have nuclear power. And so they claim nuclear weapons, which they've been accusing since the 1990s. It's a bit like Iraq. It's the same theme. What you'll end up getting, if this gets worse, is we'll get a bigger spike on the gold-silver ratio, because gold is the ultimate safe haven for the big players when you're getting the acceleration in debt debasement and they need to park up big money fast. It's not silver.
The important takeaway, I just want to highlight this for the audience too. The important takeaway is that this ratio is sort of range bound around 100 or so. So while gold goes up, if we want to retain this ratio at the same range that it's currently at, silver ergo has to go up with it. Does it? Does it not?
Of course, it's maths. It's a tow rope. And what tends to happen, I sometimes use the bungee cord analogy. When it turns out to war, that means you've just hit a hill on your 4x4 with a bungee cord towing your trailer. And what tends to happen is the flex in the rope gets more. The trailer was starting to catch up, and the bungee cord shortened a little bit, and you had normal momentum on a straight road. As you hit a hill, now it's all the power of the 4x4 is flooring it, and now the trailer's hanging heavy, and that's where the gold-silver ratio stretches a little bit. So whenever you have that peak crisis, where I want to take you in terms of explaining this is you're probably going to get a once-off spike where you've made the final high in the gold-silver ratio. And my concern for everybody is technically they're calling it every time that you've gone above 100. And they go, this time, and you'll be the boy who cried wolf. You will know it when we have the peakest crisis. This was, the rejection here. People would have called it, that's it, it's all silver to the moon here. What ended up happening is they shut down the goddamn world and mandated vaccines. That's when you did it. You'll know the most radical, outrageous news piece when you say, wow, this has just gone major. This is the epic crisis that they're using to mask the worldwide depression that they're manufacturing. We've already been in and out of a recession a number of times in my suspicion. They've changed the definition. That was already once. We've probably gone in once or twice. And actually, it's going to get worse. That's how they bring their problem reaction solution into bringing about all that they wish to bring about on us. So you'll know it, and it will be accompanied with a gold spike. And everybody's called, but we've twice called a turn in Bitcoin dominance only to be wrong. Now, I'm not conflating Bitcoin with gold, but in the original the original narrative of a dominance in is precious metals, not crypto, of course. And gold is like the gold dominance has been on this Bitcoin dominance for this crypto cycle. And many people have called the alt bull market in cryptos many times only for Bitcoin to dominate. And we've been on the wrong side of that twice ourselves. And it's the same here. We're going to have this is a much longer process. We've got so much to unwind and so much damage. As I've said before, it's quite feasible you could have a spike that could surpass the previous spike. And I've also drawn the technical setup that holds here. That doesn't mean it has to happen. We're not saying this has to happen. We're just saying be on notice that you can't be too confident or too cocky about saying, this is it, it's all silver over performance from here.
If you're looking for great deals on gold and silver, coins and bars from a company that you can trust, then you've got to check out the good folks over at Pimbex. This year, I've really gotten to know these guys, and all I can say is you're not going to deal with a better group of people. They're a family-owned gold and silver online bullion company offering the essentials and more at industry-leading prices while always providing first-class top-tier service. That's PIMBEX.com. And if you're looking to convert some or all of your retirement account into real gold and silver, give Pimbex a call. They'll help explain the process and get you started on the right path. Your support at Pimbex also helps support the channel. So reach out to Pimbex today. You won't be disappointed. And make sure to tell them Danny sent you.
Or platinum over performance. And we've done we're exceedingly bullish platinum, and we're bullish, very bullish silver, and we're bullish gold. So we love them all. But you don't own enough of the primary metal. And we've continued to say, be stacking 75% in the gold side until we run the 75, this invalidation of the pattern zone here, that low there. So we've got.
What does that mean? 75% on the gold side. 75% of your precious metals portfolio should be in gold. Is that what you do?
Well, those that are buying monthly, and look, this is non-advisory. This is our take and what we've been doing. Our opinion is gold leads. If you're overweight silver too soon, you're actually being left behind quite a large degree. I'm just going to check if that tweet had it. No, it didn't have it either. There was a great chart that was just showing how much gold has overperformed silver recently that I was looking at on a tweet not so long ago, so far. So the point of, if there are many people that say gold's expensive, I can't afford gold, I can buy silver. Well, actually, you can afford gold. You just can afford a lot smaller pieces of it.
Mm-hmm.
Build.
Yeah, there's quarter ounces pieces of gold and things like that.
Yeah, everyone goes, well, I'll just cut to the chase and have the fast bit. Well, actually, gold's going to potentially overperform for the first part. If you look at CV19, this is all gold overperformance. From the 65, when you got rejected in 2016, the Shanghai Accord, this is all gold killing silver.
But what if you're looking at it from the perspective of an investor that's never going to sell their gold or silver and pass it down to their kids? What would be? I mean, yes, from a time, if you're time sensitive, then gold will outperform silver, and you could cash in your gold chips in exchange for silver chips in stage 2 and ride the silver bull up. But what if you're kind of like someone that just buys this stuff indiscriminately, not really trading in and out?
In terms of physical acquirement, I find the costs of acquisition and the premiums, it's never a trading position for me. If I want to trade it, I use a platform and it's a derivative. I know it. You don't own it. You're going long. You're using a bit of leverage if you want, if you know what you're doing. We suggest using HVF method, of course. Find out more from our YouTube channels. But if you're talking about investment, I'm a holder generally. But the one thing I will say, eventually gold could reach a point that relative to physical assets, it's a good point to actually certainly lighten immensely for, productive land, many other things that will get hammered when everybody's being crushed. So I wouldn't say you ever say for infinity, but I would certainly say if you're planning family-based legacy wealth for next generations, you would be overweight gold now. At a certain point, when the gold-silver ratio hits single digits, let's say it bounces at 9, I'm getting out of 50% of my precious metals and buying physical assets like land, farmland, and other things. But I will still leave a base minimum portfolio to future generations of gold, silver, and even a little bit of platinum. But there will be a time to lighten up. We mustn't be bugs that it just means we're on maximum holding, we're 60, 70% of our liquid net worth all in precious metals. There will come a time that other assets will outperform, but we're a long, long way away from that. But it could still be, in this lifetime, I'm hoping for the amount of years you and I still have. But I just feel that you're looking at a 10 and a 15-year unwind. You only have to look at the 80s to realize you went from 70 to 1980. Just net up in gold. And it's only really it's often in time, it can be the last third of that cycle and even the last 25% that silver absolutely rips it and kills it. So my key point to people that want to maximize wealth through this process is that for most of it, you're going to have overperformance in gold because it's the big money that drives it, even though it has a huge market cap now. It must be 23, maybe even 24 trillion by market cap. Mm-hmm. So that's the key point. Yes, do have silver. Unobtainium is a risk. add 75.25, so you add to it. Then when that moment comes where we break down through the 65, this red line down here, Danny, that's where you just stack silver, and you can even rotate some of your gold into silver and do swaps in whichever country or area you're at. Sell the gold, buy more silver, and then you can end up, you can even end up overweight silver on the way down. And that will be very, very, very beneficial. But just bear in mind, it can be a very small by time frame, and it's the peak of the crisis. The peak of the crisis came here for CV19. But don't forget, in August, we had the repo crisis. That was around here. We were in trouble from the Shanghai Accord over there, all of that. And during this entire period, gold overperformed.
What about gold now in nominal terms? I mean, we're looking at it from the ratio perspective, but in nominal terms, I'm looking at the chart on my end. It looks like we've had a triple top at the moment. If you can switch over to that and give us your insights and where you think it goes from here. Yeah, there you go.
So I'll just take the lines off for a second and allow everyone to soak it up. Look, this is a firm move. These last three candles are pretty brisk. And this was very much a wick at 3,500. It got sold off. We're on a daily chart inside that same day. And it actually closed roughly where you are. So this is breakout territory. Don't get me wrong. This looks pretty decent from gold. It's breakout territory. The one thing I would say is you have quite a steep ascent here. So clearly insiders have been dip buying. If I change colors just to show you those key areas, you can then go with the arrow. You can see real dip buying. We were saying accumulate here, accumulate here. We continue to accumulate gold. And then you got dip buying there. And you also got some on that wick. Look at that wick on that candle. Mm-hmm. And then you didn't come down as far. So this war's been planned. These people know. So as the gold come off, there's been real dip buying. And now you've got a real three candles that's probably taken you. If we were to shut today, daily, the daily time, it's not far off. You're going to close higher than you did on that secondary high, and you're going to close higher than you've closed ever in terms of this chart on the daily. So you could be looking at a higher daily close. Yes, intraday you went higher here. You didn't close there. You actually closed right down here. So, the candle opened there. It went all the way up, came all the way down, and then came a little bit back up and closed there. That's what's given you the red body. So you're looking at a potential daily all-time high close at the end of day.
Understood.
So it's pretty bullish gold as far as I'm concerned.
Are we able to extrapolate out what the next move, what the next leg up looks like for gold?
Well, we have a couple of ways we look at this. This is a broadening structure with a downward megaphone bias. So we refer, and this is only an HVF method that you get this phraseology and how we do it, but you had a real flagpole up there. We did an immense amount in a short time. So you needed to shake your head and relax. And of course, you'd also done quite a bit over a slightly longer time with a little bit of a flush out after you'd made the 3K properly. So a small pullback there. The rest is just chop and churn. So that megaphone, we expect, this is called an upside continuation pattern by our theory. So a descending megaphone on a bull pole. So that's the phraseology we use in HVF method, giving you a little bit of a heads up of stuff that we do. This is continuation. This is a shake of the head. No real enthusiasm to sell off. Comes off, rallies, comes off, rallies. And you've got quite a steep buy grind line under there that shows money is drip fed all the way in. And you're now going for the megaphone continuation break. Which is taking place right here. And you're going to get a daily all-time high close, not an intraday high. So, I mean, that's bullish. It's more bullish than most people are treating this.
Understood. What about the bond market? The bond market seems to be holding relatively steady, which wasn't the case during the Liberation Day sell-off a few months back. What's your take on what's happening now with the bond market?
Well, it depends how long you go in terms of tenor. The one I'm most looking forward to seeing is the 30-year, because it's the long end. I think that things are going to get badly priced. Here's our technical take, and they all look fairly similar. First of all, you're pretty close to previous highs on rates. Your all-time high was here 23rd of October 23. Our overall take is that this is what's happening. I'm going to again fatten that Koki up and just give you a draw. You've had a bit of a zigzag, but you've gone in from a high to a low there. You're in a secondary high into a low. This candle, don't ever forget this, that was peak tariff tantrum. And it's a key point for American maximalists to understand. Everybody thinks when you mention, the dollar milkshake theory or something, that a major spike in rates will only lead to American dollar strength. It can, and it's possible, and it's typical. But what you saw on Trump tariff tantrum week, because this is a weekly candle, is you saw the spike in rates and you saw an absolute sell-off in the dollar. And who went up best? Gold, because gold is the ultimate debt-based asset value that nobody argues will be a reserve asset for infinity. There's no element about, proof of work. Listen, digging holes costs energy. Finding and refining costs energy. Locating, this is proof of work before anybody in crypto ever thought of the phrase. So what you've got in our suspicion here is you're quite close to highs. And in fact, recently, when we had a little bit of a long end frenzy, everyone was talking about the long end, you're very close to the previous high of 23. So we're staying in touching distance. And this again falls into the category of upside continuation for us. Our suspicion is that you can go up. However, if they create a huge rolling into a much greater war, there might be a bit of fear. You might get a little bit of a wash into debt, but gold will be far more selectable. I don't think debt has the reserve asset trust ever again this side of reset. So debt markets have lost faith. It can get a little bit of a bid because it pays a bit of interest. So we could see coming back into the range. You could come back into this ledge-like range for a while, but the longer term is higher rates we expect. And don't assume that absolutely means dollar-associated strength, because everyone's looking at America outside of America with a far more jaundiced eye than they've ever done before. They're looking at a guy that's a bankrupt that hasn't yet declared bankruptcy, far more so than before. And that's not good for debt markets, especially with all that still has to be rolled and everything else. So debt markets are pretty close to the high on the long end. We can check the 10-year, which is the shorter side of the long-term debt, but I don't think it's differing too much.
And again, for those for those uninitiated who don't regularly look at these charts, these are yields projected on here. So anytime the yield goes up, that's bearish for bonds, and vice versa. So
this is how we're characterizing this. You've got a localized high. You get a little bit of a pullback, and then we're going to say up and away, and we're going to call continuation again. A little bit of an easing up. Next time you break, we'll be in early. You want to be short the likes of TLT, for example, an ETF that is made up of long-term debt from 20 years upwards. So that'll be something that goes down with the debt valuations because it's made up of debt. And many people think, well, isn't it a buy now? Look how hard it's gone. How much of this debt-based crisis do you think we've dealt with yet? Do you think any problems have been dealt yet?
Don't we still have 7 trillion? Don't we still have 7 trillion in U.S. debt that needs to be rolled over? What are they going to do with that? How are they going to tackle that?
Well, you've got the Fed actually buying consistently because there's no liquidity. Why is the Fed buying? Because people who want to get out can't get a bid. And if they get desperate and they start selling down the stack, you're going to get contagion, loss of value of the market. So this is the key point. Another key point I make, I'll stop sharing screen now for a bit, is that many people, because it's a huge market cap is a garbage measurement for understanding an asset. What it is people say something's a certain value, and then they create an almost near infinite amount of it, and then they multiply that value by the infinite amount they create and say, huge business. And the analogy I give is, it's a bit like I list Francis Hunt Inc. and I own 95% of the shares. I give 3% to my family, promise them that I'm going to make them rich, 2% to friends, or 1.5% to friends, and list 0.5% on the stock market, and then start buying my share right the way up to the moon. And everybody chases in, retail chases in on momentum on a very small actual float, publicly available float. If people buy that up, I create 100 million shares, and they buy that up to $100, and I help it along the way. Technically, I'm worth $100 times 100 million shares. That makes me worth 10 billion. Good luck trying to sell 10 billion on the 1% of retail that goes. The minute I start selling in any volume, it goes from $100 to 0.001 cent. As everybody flees, the same momentum that rushed in goes out, and you'll be lucky to get any of it out, and your average sale price will probably be about $3, and then it ends up at less than a cent. So you'll never materialize that market cap. It's a completely fraudulent number. I'm not worth 10 billion because I did that. And in the same way, you don't have the liquidity or the interest. You don't have whales that are going to say, yeah, Francis Hunt's company's worth 100 billion. That's actually undervalued. It should be $1 trillion. There's no one bringing money in that. Even if I, turned my YouTube channel into a major influencer and I got, 100 million people watching it, and I was putting on the best show in the world, the money won't show up, especially when the insider starts out. You might get away with a little bit. And that's what's happened with all these crypto pump and dumps. So the whole aspect of market cap, now you have a big version of Ponzi. That's why I'm using crypto analysis, because people can visualize and understand, that girl that had that repulsive token that she pumped and then dumped. I don't even want to say the name, but people can't see that there's just a bigger version, and they think it's more organized because it's the Fed and it's the country's debt and all of that. It isn't actually. It's an older, bigger version that they've been maintaining the price. If lots of people, China, for example, if they try to dispose of, they've got 650 billion odd, depending whatever the value is, it's continuing to lose value. If they try to sell 10 billion a day of that, they're going to run into a huge problem, a huge, huge problem. There's no one there to buy it. The Feds had to show up to provide liquidity for other buyers and their local pension funds that were a bit short and need to make pension payments. They have to show up and be the buy side. So that valuation is not there because there's not enough voting money that says, yes, I agree. It's the liquidity at the current valuation. It's a known fact when you get a blow off in a stock and you get a shooting star, there's virtually very few shares that are trading on that minute, hour when that happens. And that's what scares everybody. Because some people say, I want to get out. I said, there's no bid. There's no bid. Oh, chase down, quick, I must get out. And there's still no bid. There's nothing in the stack. Chase down. You've got to lock in some profit, who've been into this pump. So that's what happens. And that's why the Fed is actually actively investing it. You should look at the Ponzi scheme they've put on with the same contempt that you look at a crypto scammer that's done a pump and dump scheme. It's just a more elaborate, more arranged version thereof. And they've used it as a financing mechanism for a generation and a half in the system.
Can they put on $7 to $8 trillion on their books though?
Well, it remains to be seen. The amazing thing is we get very little information about the 7 to 9 trillion that has to be rolled. They don't say we've already successfully rolled X amount and we expect to do that. They don't want you thinking about it. They don't want you knowing when they're doing it. They're going to create a war and such fear that they're going to hope that there's going to be, they need the stock market to crash. This is why I say we haven't had the peak crisis. That's why your gold-silver ratio hasn't had the peak spike yet, potentially. I'm not saying absolutely. I'm warning it's a possibility that people are undervaluing. Everyone's all on my feed, maximalist silver now and all of that. That's the caution. Technical analysis, real worth, you need a blow off top. And this is the crisis to end all crises. So it's got to be, in my mind, even worse than COVID-19 and the shutdown. That means, global conflict for me. It's very hard to surpass that. And that's going to be a wall of money chasing into gold. Gold spits up to 4,500. Silver can still go up moderately. It doesn't even have to go down. It might go down in bits on certain days and certain weeks, but it just could fail to go be chased at the same way. And we get the stretch in the bungee cord because the 4x4 is hitting the hill now, and the trailers just started to hit the hill, but you've got your turbo diesel and you've floored it and it's torquing in the car up and it's flexing a little bit now. We're going to have that moment. Hitting the hill is the peak, when you start to hit the peak crisis. What happens as you keep having to pull, you truly reach the technical limit of the bungee cord before it snaps. And it may even manage to be higher than the CVA 19 high. It's not a prediction. It's not what I'm saying absolutely, but people don't factor that in, because all the money is going to go into gold to get some of the money to go into debt, because where everyone used to run into debt in a binary sense anymore, there's not that same trust. There's not that same faith in the American debt market. There's not the same confidence in its solvency. And at these rates, you aren't actually being paid sufficient return to beat the true inflation rate, never mind even cope with all the money that's going to be created in a war situation, and the loss and the devaluation in the dollar. So we are already in financially repressive times. What they have to do is they have to devalue debt and currency, and the dollar is it. That's why the dollar gets hurt most. That's why America gets hurt most. As terrible as the UK is, tying itself to the same mast as America, as awful as Europe is, as awful as other countries, that's all code to say, but their housing market, their debt problem. The hegemon falls off the tallest ladder from the highest point. The dollar devaluation has to be huge. It goes hand in hand with the debt devaluation. It's likely to get disorderly as more people are doing it. And the likes like Bill Ackman, the bond king, who's saying what great work Israel is doing, starting the war and all of that, he's already shorting it and making profits out of the loss in living standards Americans will subsequently lead. Because as that bond market devalues, so the currency, due to their mutual relationship, goes down. And this is the key message. It's very bad for hegemons when hegemons die.
Understood. I think this is a great time to segue into Substack viewer questions. For those who may not know, we do ask our members to provide questions to our guests, oncoming guests. And this is viewed as bonus content for the subscribers. If you'd like to get access to these bonus questions, link to the Substack is down below. It's capitalcosm.substack.com. Okay, first question is from Jack Leons, and he wants to know, would hyperinflation obviate a David Rogers Webb style great taking?
It's a good question. So the one thing why I don't feel we do just a standard hyperinflation is we prefer the framing of stagflationary, and that you get a hyper version of that. So we've kind of created the phrase because it's not typically used in economics to talk about hyper stagflation. That's something we've sort of cobbled together. So when you say hyperinflation, the problem with the hyperinflation is it usually means you go not only double digits, but potentially beyond. The fact of that is that it's instant failure. Because most payments would not be able to be made, and you'll get defaults all over the shop almost straight away. So it won't be a very lengthy. So you'll have a very small period of hyperinflation. What's actually happening is they're trying to take you down the mountain very steeply and hard, but not push you off the cliff. So it's a combination of reduced growth and negative growth. In true terms, I think we are contracting already. So everything that's been done on tariffs is contractionary. They did tariffs in the 30s, by the way, for the Depression. I think it was my other namesake Lacey Hunt, that was mentioning that as a historical message. It's entirely initially inflationary, but long-term disinflationary. That means depression. Great. It's kind of, people just don't have the means anymore to spend. So you get a push up in price until everyone either can't buy that stuff anymore or finds a local substitute. And that's what America is trying to correct. The fact that they have such huge deficits with everyone, Europe, China, and everyone else. And they're trying to correct for that. That's what tariffs is doing. It makes all imported goods more expensive. So you buy less of them if you're an American, and makes the potential for making them locally more viable, especially when you devalue the currency. So you crush the dollar, which will make American produced goods cheaper. So you're giving it's currency manipulation in essence. Everything they accuse China of course, they will do themselves. That's what they're doing. And it's also anti-free trade. So you say, it's not fair that they do that to us. We have to do this. But who's starting the tariffs, this round of tariffs aggression? It is the US, but they need less imported goods. So you're going to get the stagnation of people spending less and having less to spend, and their cost of living going up. So it has the inflation part at a very high level, typically in real terms, but not hyperinflationary. So they're going to grind you down the hill all the way down in a very low growth environment. So everyone's going to feel a lot poorer consistently on an ongoing basis. So I don't think the hyperinflationary part lasts very long, but you could be right, and we could have a small spike and it goes mega rates, and then it's crash bang, power outage, other sideshows to distract everybody. Oh, the Russians hacked the servers and the banks and zeroized everybody's accounts. We promised to bomb them for you. We don't know what money you had in your bank account. Oh dear, and there's this debt problem. It seems we need a new solution. Come the problem, I suppose it's time to have a rethink about all of this. Here's what we'll do. So the great taking. So your question is, could hyperinflation be an excuse for the great taking? It could, but lots of other things could. They could use a hack narrative. Klaus Schwab spoke a lot about that. In a war-based environment, war isn't just bombers and planes, it's a cyber attack, Klaus Schwab. It could be quite a few things. So it's an interesting question, but your speculative guess will quite probably be at least as good as mine. I don't think I have rights to any greater insight than you. A manufactured financial event of inflation, having a short spell into unpayable rates, all of these things could do it. But the key point is not so much what will be the detail, that's what is the straw's name that breaks the camel's back. That's not the fact. The fact is the camel's back is going to break. And if that's going to happen, your money in your bank is going to disappear. What have you done in terms of protection? You should generally be running bank balances incredibly lean. You should be keeping cash at home and precious metals. And precious metals in the broad school. So yes, bars because it's cheaper, but also coinage in both silver and gold, so that you've got transactional capability. And you should be building relationships directly with your farmer and maybe paying him in those. That's how you deal with great taking. Because in the event of great taking, most of your middle class and upper middle class neighbors and friends are going to be absolutely bone poor. And it doesn't matter what the straw's name was that broke the camel's back. It's the fact that you can't eat, you can't drink, you can't transact, and you're in a problem environment where they seek an extreme reaction from you, where you will sign up for their chosen, highly biometric surveillance state solution. That's the true. So I kind of shirking your question and saying the better question is, how prepped are we for that?
Understood. The next question is odds of Mexico nationalizing mining operations.
Everybody, and I love the Americans, and I love your patriotism and nationalism. Let me tell you, the most outrageous acts are going to occur in America. People will sit in America and say, oh, I don't want to buy miners, or in Canada, America, or whatever the case may be. Nationalization is going to be becoming more a thing and a problem in a distressed, failing hegemon than it is to be in a nation that's not. Now, everyone in America will say, oh, there's much more rule of law here, and Mexico very prone to this, and South Africa and Congo and mining, high risk stuff. Let me tell you, the collapse of the hegemon is the eye of the storm, and things you never thought would happen is going to happen. I would actually choose mines outside of the US. I would choose mines outside of North America over America during hegemon collapse. So I'm telling you, your own government is your biggest enemy. And in this process, the biggest fall, the tallest ladder, is the American one. And things you never thought would happen in your own country will say, it's an emergency. We have to do it. I actually would rather have miners in Asia
emergency.
and Africa, in a weird sense, because you're paying a much higher risk premium for them now, because everybody has the traditional model. Everyone needs to understand this is an inversion game. Things you never expected. All those that seem clean and pearly white to you are filthy to the core. And all those others that have got risk priced in them are cheap. That's how this whole world flips. And I know it sounds like totally counterintuitive. How can you say that? You know, I can drive in my car to, you know, Nevada, where there's, you know, Nevada Mining Company. The financials are so poor in America. When this goes down, if you have a debt-based collapse, they will not be able to pick up your bins. They will be running for your pension pots. They will be renegotiating your 401ks, your Medicare, all of these. None of these things can be afforded, and they will renege because there is no other option. The boomers want them, and the Generation X and all the other generations below can't afford to pay them. So you're going to get reneged on a scale you haven't even realized yet. It's a fate of mathematics. So they're going to look for wealth and money anywhere they can, any way they can. You don't need to look as far as Mexico. You might be safer in Mexico than in the US. I know it's scandalous, it's inverted, it's counterintuitive. America collapse of the hegemon is real, it's big, and things you've never thought would happen is coming.
Wow. And final question. Advice for a 24-year-old engineer with student loans being paid by employer. Should I stack metals, pay off debt, or trade markets? Currently, I'm stacking and trading. Well, we don't give advice here, but if you, Francis, were 24 years old with student loans and your employer was paying off your student loans, how would you approach that
one? Yeah. So as you mentioned, the phrase we used to use in the entrepreneurs organization is gestalt. I don't tell you what to do, but I would say when I was in an instance similar to what you just described, I did or would choose to do the following so that you can share from my experience and make your own decision. Especially with an employer who's paying the loan, keep your job. Okay, keep your job and let him pay it off for you, and you stack for you. So I would be 100% on getting the best outcome out of an event that is going to scar everybody's understanding of economics and is going to make case study material. And you are in the US, I'm assuming, you didn't state so in your question, but most 50% of the audience is. You're going to see things you've never seen, and you want to have metals on you. So have coins of silver for transactional, and have gold. Probably go coins because you avoid the capital gains. I would let me not give you the advice. I would go coins, and I would let the employer. I'd keep my job. I'd be real sweet at work. I wouldn't be late, and I'd show good attitude and let them keep paying that off for you if that's the contract you have, and try and maintain your job for as long as possible. Put all your disposable, or I would put all my disposable, in precious metals, in a combination of coins and gold and silver coins. That's what I would do.
Gotcha. Well, these answers have been really on the mark. I'm going to make an exception. I'm going to make this free for the YouTube audience, so I'm not going to put this behind a paywall or anything, because I think what you outlined with these last three questions is pivotal for the viewer. So we're going to make an exception here. It's free for this episode. Francis, thank you so much for your time here. Thank you guys so much for watching. Where can people find you if they want to see more of your work, Francis?
It's unheralded period. I mean, traditional financial advice does not prepare you for the scale of the ruction and the shift in the tectonic plates that go in this process. As I've said, it will be economic case history, and it will be global, and I fear it's going to get worse before it gets better, which is why I say we can't call the gold-silver ratio as topped yet, or that it's certainly on its downward trajectory. That said, the bigger the cycle, the bigger the overall move, and it's a very positive thing for precious metals. To engage with ourselves, we focus very distinctly on wealth building in this times. I mean, we've got an absolute coining it currency trade. We've got a deep in the money crypto trade, and we have deep in the money gold, platinum surge, super surge. It has pulled back today. That's because gold will be getting dominance. But we've got a beautiful platinum breakout that's been spitting cash at us. You need to build wealth. You need to understand the manner that we go about it. You need to protect that wealth. Your government is your greatest enemy. To you, 50% US audience, the US government is your enemy and is doing its damnedest to affect your wealth. They need you as a serf. Post all the events they're going to throw you on UBI that they can control, so you'll sign any contract they put in front of you. They want to bring in this global technocratic oligarchy, Bolshevik communism with the technological overthrows. You need to protect your capital so that you have choices, and you need freedoms. Those three things are what we're all about and what we aim to develop in our community and our community members. Make you richer, keep you richer, and help you buy freedoms and optionality in what's going to be a crazy scavenge mode by governments and a reneging on contracts everywhere that you've not even guessed the amount of impacts this is going to have on services and livelihood in your country, whether you're in the US or in the UK and in the West generally. We intend to help you survive that to the best possible degree. Precious metals is part of that. Thanks for having us on, Danny.
Yeah, it's always a pleasure having you on, Francis. Guys, if you enjoyed this podcast, drop us a like, comment, go Francis, go in the comment section. If you disagreed with anything, that's fine too, but let me know what you disagreed on. Drop me your thoughts down below. I do, in fact, read the comments, good or bad. So I'm always interested in hearing your guys' constructive criticism. Let me know your true thoughts. Also, check us out on Substack, capitalcosm.substack.com, where you do get the bonus content from the viewer Q&A. But today was free because I feel like Francis's insights were too important to put behind a paywall. But for future episodes, we will have the bonus content on the Substack. So check it out there. Liking, subscribing to the Substack, doing all that helps support the channel. So much appreciated, guys. Much appreciated for your time. Have a great weekend. And I'll see you later.